We have some great specialist speakers here today, which I hope you guys will really love getting to hear from them. We have a bookkeeper, a CPA, and a business finance coach. So how often do you get those three people in a room together to hear from them? We are going to be recording, but I think nobody's in the shot but the people who are up front. So if you ask questions, just make sure to speak loud enough so we can, provide the feedback to people who will eventually watch the recording as well. Please feel free to stick around afterwards, connect with our speakers, and connect with each other because we have a lot of different industries represented here today. So get connected with some other professionals and do some networking. That is our hope. The other reason I'm excited about this event is whenever I started my own business, I just kind of jumped in and started my own business. I do not have a business background. I did not know what I was doing. And I do really good at what I'm really good at, which is selling real estate. But when it comes to doing books and ordering finances and having a budget and being a really good business owner, like that part was lost to me for the first couple years of my career. And I royally screwed things up. I will admit that to you guys. I even had a bookkeeper who did not know what he was doing. And Courtney can attest when I brought my books to her of a few years of mess to get everything cleaned up. And so just the hours, the money, the expense that went into having things not in place. I hope you guys get a lot of good content today and make some good connections. If you can please scan our QR code, we would love to continue connecting with you and providing value. And so with that, I'm going to turn it over first to our CPA, Tina. And Lauren, do you need to hit record? I already did. Oh, you're good.
All right, I'm Tina Honstein. I work for Corn Jansen Associates, been doing taxes for about 12 to 13 years now. So I'm going to kind of just share with you the biggest mistakes that I've seen small business owners make, hopefully to save you from being the tragic stories for your CPAs. So I'm assuming most of you guys here do not like doing accounting. Is there anyone here that does like doing accounting and understands it really well? Probably not. So that's the biggest thing. And that's the basic building block of any business, small, large, sole proprietorship, large company, is the accounting. And so if you don't start a business with good accounting, you're just going to keep going down that road of just, bad accounts, not reconciling, not making quarterly estimates, not paying your taxes when they're just having huge surprises with your business. You want to have a good idea of what your net income is. So the first biggest thing is just poor record keeping and organization. When you work for somebody else, you get paid wages, you get withholding done each paycheck. Your company withholds that. They send it to the IRS for you. When you file your taxes at the end of the year, you show your income, show what you've already paid in. Usually you're paid in enough or you get a refund. When you're working for yourself, nobody's sending money to the IRS for you. So a big surprise that sole proprietor or single member businesses have is they get to the end of the year and they're like, how much do I pay? How much do I owe? What am I supposed to send in? So if you're keeping track of your books throughout the year, you'll know what you're supposed to be sending in each quarter. If you're having a bookkeeper do your books, they should, if you have a lot of income in one quarter, you're going to want to send in more money to the IRS because the IRS doesn't want their money April 15th. They want it throughout the year. And so if you're only just paying it April 15th, you're probably getting hit with a bunch of underpayment penalties and interest. And, I think probably one of the biggest things when I ask people why they don't hire a bookkeeper, it's like, well, I'm just one person. I'm trying to keep expenses low. I'm growing the business. I don't want to spend, another $100 or $200 on a bookkeeper. But then they get to the end of the year and the underpayment penalties and interest that they pay on their taxes is either the same or more than they would have paid a bookkeeper. And plus, their cash flow is all messed up because they don't have the money to pay the tax liability at the end of the year. I really, if that's the biggest thing that I stress to my clients is invest in the building blocks of your company, invest in a good bookkeeper. It's worth the money at this time. Like, trust me, for your sanity, for your business, for your cash flow, it's worth the money knowing what your net income is each year. And if you have, the next point is kind of like inaccurate estimates. So if you have a big quarter, and you have someone doing your books, they should hey, you made a lot of money. You might want to contact your CPA, see if you need to send more money in this quarter. That way you're kind of keeping track of things throughout the year. The other side of that is, if you are working with a CPA, they're normally going to set up quarterly estimates based on what your prior year income was, because we're trying to make sure you're not paying underpayment penalties. So if you have a down year, if you say you have like a medical thing, or you're not working as much, and they set you up to pay these high estimates based on your income last year, so you're paying all this money into the IRS in Colorado, but your income is much lower. That's going to really hurt your cash flow. You want to keep that money in your business. You want to keep that money for your needs at that time. You don't need to pay in all that money, but your CPA has no idea. They're assuming business is continuing as usual. So you're going to be paying in a lot more money than you need to, and which you'll get that back as a refund, but it's better for you as a business to have that money throughout the year. So that's kind of like the inaccurate estimates of either paying too much or paying too little. If at this point you say, no, I think I just want to keep doing it by myself, invest the time each quarter to go through your books, to balance them at least each quarter. Don't wait till the end of the year. That's the other biggest mistake, is waiting till the end of the year, because misclassifying expenses, that's a huge thing. I had a certain client for 2 or 3 years in a row. He'd it'd get to be December, and he'd be just kind of throwing things on his P&L from his bank statements, from his credit cards. He brings me his stuff for his taxes, and he's like, yeah, I had like a $20,000 loss this year, so I should be good. I'm not going to owe any taxes this year. And he's all excited about that, and I look at his P&L, and he's an S corporation, and so there's owner draws on there, which are not deductible. There's his prior year tax payments, his quarterly estimates that are not deductible. He's got credit card payments on there, which are not deductible, and credit card expenses are different than credit card payments. So the transfer from your bank account to your credit card, that's not a deduct. You want to, and Courtney will talk about this more when she talks about reconciling accounts. But credit card expenses are what you deduct on there, not the payments. So you're kind of double dipping if you record the expenses and the payments. So by the time I reclassified all of those things, he ended up having like $100,000 net income. And he's panicking because he doesn't have the money to pay his taxes. He's thinking, I've got a $20,000 loss. And he's, now he's got this huge tax bill he's not prepared for. So if you wait till the end of the year, chances are you're going to just be scrambling. You're not going to take the time to do your books right. You're not going to put expenses in the right categories. So don't wait till December. Don't wait till January of the next year. Dedicate time at the, I really would stress doing it monthly, but at the very least, dedicate time each quarter to make sure that way. That's when quarterly estimates are due. That's when you want to talk to your CPA. That's when you want to, make sure everything is going according to plan for the end of the year. And the next part of that is commingling of funds. Make things easy for yourself. Separate your personal and business accounts. Separate your personal credit cards, your business credit cards. Whenever I have a client that's starting a new business, the first thing I tell them is get a business EIN number and open separate accounts. Even if you don't want to get a business EIN number, if you just want it for your, if you just want to keep it under your name, fine, but open a new bank account, open a new credit card. Don't use your personal credit card and say, well, at the end of the year, I'll, sort through things, because it gets to the end of the year, like, what was this Amazon expense for? What was this Chipotle purchase for? Was this business? Was this personal? And guaranteed are going to be missing things. You're not going to get enough expenses in there. Or you're going to be deducting things you shouldn't be deducting. And if you're ever audited, that could really come back to bite you. So, if you have a bookkeeper, they're probably going to tell you that anyways, because they're not going to want to deal with trying to sort through all your business. If you're doing it by yourself, do yourself a favor, keep things separate. Don't, just assume that you'll remember things later on, because you're not. So those are the biggest building blocks of why you need a good bookkeeper, why you need a CPA, why you need, just someone, like Heather said, focus on what you like doing, because there are people, oddly enough in the world that like accounting, that like doing taxes. That's my job. I like doing it. That's what, I've built my career doing. So let us focus on that. Let us save your sanity. Let us save your time, your money, because I promise you it's much better spent on the things you like doing, because you're really going to put your time and effort into things that you enjoy doing. You don't like accounting, you're not going to put your time into it. You're not going to try really hard to make sure it's correct. You're not going to make sure your balance sheet is correct to all your bank statements. So really just, if you want to build your business, focus on the things you enjoy doing. And the last topic that I'll touch a little bit on, but this is something to kind of, if you have a CPA, that you're going to really want to discuss more with them personally, because this is kind of, it could vary for each person, but business structure. A lot of people start out when they're just one person, they just start out as a sole proprietorship, and they file a Schedule C on their personal return. And so a lot of times, and that's a reason why they don't balance their accounts, because they don't have a balance. Like, well, my CPA doesn't ask for a balance sheet. Why would I need to balance my books? Why would I need to keep track of all this? So, when you start a business, obviously you want it to grow. You don't want to just, stay doing the same. The whole point of a business is to grow it. So once you start making a lot more money, there comes a point in time where you're going to want to switch to an S corporation for tax purposes, because you get better tax benefits. So, if you don't have good building blocks as far as your balance sheet, if you don't have good records, you're going to go to a CPA and say, I want to switch to an S corporation. And, they're going to ask for records of your prior books so that we can build bases, so that we can see, okay, what are we starting with? And if none of that has been taken care of for the past 3, 4, 5 years, you're going to lose all of that basis, because we're not going to be able to reconstruct it. You're just going to have to start from scratch, from zero. So even if you're just a sole proprietorship right now, it's still important to make sure your balance sheet is taken care of, because eventually when you grow, when you get bigger, it's going to make your life a lot easier. It's going to help you build basis in your S corporation. There's other things that go with different tax structures, business structures, and that's particular to each different business. So talk to your CPA about that, but don't just have blinders on and say, I'm going to be a Schedule C sole proprietorship for the rest of my life. That's it. Because you might be missing out on a lot of tax advantages by switching. Even if you're just one person, you can still be an S corporation. And a lot of people think, why would I be a company? I'm just one person. But there's still plenty of advantages of being an S corporation. So, those are things that you just have to think about, and have people that are knowledgeable about it, that want to help you grow. So that's why you have bookkeepers to keep things in line. That's why you have CPAs to help you figure out which different business structures you need to be, and also financial advisors to make sure you have the money to keep growing. So those are the main points. So Courtney's our bookkeeper. She's going to touch more on the points of how you actually reconcile accounts, why it's important, and those specific things. So I'll let her come and discuss that.
Hi. So I'm Courtney. I am the owner of Modern Chic Accounting. I started my business almost 2 years ago. But my background is I'm a licensed financial advisor. Started at 19 years old at Northwestern Mutual, loved the industry, offensive and defensive planning for individuals and business owners. I started this business 2 years ago because my son came to me, my oldest, I have 4 sons. He came to me years ago when he first started his own business out on his own, and he was like, "Oh my goodness, Mom, you were right." He got hit with a $23,000 tax bill when he was 22. Uh-huh. So I marked that one down. Mom, you were right. Okay. Never forget that one. So I really started, he's like, "Will you help me?" He's like, "Sure." So, I started doing his books, doing bookkeeping for him. And then, just planning and telling him how much he should be saving for taxes based on, his numbers. And "Mom, will you help so-and-so over here and help this person?" So I really was doing it as a side hustle as a friend, like as a friend thing, And I'm also a business coach too, and I have my designations. And so I knew every business coach needs a business coach. We just do. And so I knew I really wanted to start my own business. And I was like, okay, there's a need here for small business owners, small, medium, or large, because they don't teach you this in school. So I quit my full-time financial planning job, and here I am. I have 76 clients across the world right now. So it's really great in all different industries. So bookkeeping, it's the key to building a solid foundation for your business. It is a must if you want to grow or scale or anything. It is not the sexy part of your business. It's actually like, ugh. And that's why a lot of times people don't want to spend the money, and just they don't want to deal with it. But I will say this: taxes, books, all of this stuff is usually when my clients come to me, they have a lot of anxiety around it. Like, I haven't filed my taxes, or I'm going to owe all this money to the IRS, and just all of that good stuff. So bookkeeping for anybody, people ask me, when do I need it? Well, if you're profiting and you have a business and you have income and expenses, chances are you really need it. Okay. So reconciling, does anybody know what that is? Reconciling your accounts? You do? Awesome. Okay. So reconciling is so important in bookkeeping because a lot of times people will have a QuickBooks Online, which is great. I use QuickBooks Online, or a different accounting system. And so they have their transactions coming in, but they're not reconciling their accounts. So if you don't reconcile accounts, number one, your bank account doesn't match your QuickBooks, so the numbers are like way off. Okay. So then your financial reports are going to be inaccurate. But reconciling is so for all my clients, I go in and reconcile their accounts every single month. And what I do is I balance and I look at all their transactions and I compare it to their bank statement to make sure everything is on there. If we don't do that, then what happens is we could be missing income and expenses on there. Or you could get a couple, because no accounting system's perfect. So you might get duplicates in there, which is going to overstate your income, which means you're going to pay more money in taxes, or you're going to miss tax deductions because they didn't all come up. So we're balancing it out. And then that's also going to show in your financial reports, your profit and loss statement, your balance sheet, and your cash flow statement. You're going to know have accurate numbers. Okay. It's important, and I kind of touched on this, because it also catches errors. So if you get double charged accidentally. I had a client who got double charged for $460, and she's like, "Oh, they told me that transaction didn't go through." Well, she had no idea, and this happened months ago when we were reviewing her books. So we caught it, so she was able to go back and get a refund on that. So it also prevents fraud. Make sure that no one is charging your credit cards, or usually it's just probably credit cards or your bank accounts. And then it also verifies your cash flow. We need to all know our cash flow every single month if we want to be able to grow for purposes of hiring that new assistant that we want, or the contractor that we want. We need to know what our numbers are. So chart of accounts. Does anybody know what chart of accounts is? No, you do. Okay. So chart of accounts is your where everything gets coded in your bookkeeping. So we're going to have like your sales, some income, then we're going to have your expenses, different expenses, then we're going to have cost of goods sold, and just different things. So I go in for all of my companies, my businesses, and customize their chart of accounts specific to that industry. So for Heather, hers is customized per the real estate industry, right? We're gonna have listing expenses. We're gonna have it all broken out separately. We're gonna have, which is cost of goods sold. We're gonna have contractors, employees, all of that good stuff. So by not customizing the chart of accounts, things could get misplaced or misclassified. And number one, that's not good for when a CPA wants to go do taxes, file your tax return, right? But it's also, if things aren't classified correctly, then it can, you're not going to have good comparative data for the next year, right? Because what we want to do is look at your reports and see, okay, this was my revenue in 2022. This is my revenue in 2023. We obviously want to see it going up, but we also want to be able to track and see where expenses are going up too in certain categories, like rent. We know rent right now has gone up. We know job supplies have gone up. Just pretty much everything's gone up. Gas. So it's really important to have customized chart accounts. All right, balancing books. You probably know this one, or not having balanced books. The issues, right? Do you know this one?
I do have an accounting degree, so yes.
You do. See? So what I'm saying makes sense to you. You got it.
Yeah.
Okay, good. So if books are not balanced, again, your financial reports are not going to be accurate. So when I meet with my clients every single month, I don't meet with them every month. We do quarterly reviews, but I always send my clients their reports. This is why. A lot of times people do bookkeeping, and I have clients that come to me and they're like, "Oh yeah, I have a bookkeeper." They never get reports ever. So until like maybe the end of the year when it comes tax time. So that does no good. I mean, the only thing it's going to do good for a business owner is, okay, like for tax purposes. But the reality is if you're not looking at your reports and knowing your revenue minus your expenses, minus your net profit, number one, you can't plan for your quarterly tax estimate payments that you should be making. And anybody that makes over $1,000, if you profit $1,000 in 1 year, then you're supposed to be paying estimates or you'll get hit with the underpayment penalties. So we can't plan for that. I can't tell you how much money you should be saving for taxes if we don't know the numbers. And in your statement of cash flow, so when I meet with my clients, I do profit and loss statement, balance sheet, which is going to show your overall health of the business, your business balance of your business checking, business savings, tax account, credit card statements, and then your liabilities and any assets that you have. So if the books aren't balanced and our financial reports are not going to be right, and then the cash flow statement, I always show clients too. A lot of times people don't look at this one. The cash flow statement shows it's a combination of your profit and loss statement and then your balance sheet. Okay. Profit and loss statement only shows your revenue minus your expenses, which is your net income, which is what you pay taxes on. But it doesn't show any owner draws that you're taking. So it's not accounting for that because that's not a write-off. And it's not showing any business credit card payments or loans that you're paying each month because the payments themselves are not a write-off. So the balance sheet and the profit and loss statement, they're both different. So the cash flow statement combines the two. So you're going to see your net income on the cash flow statement minus your business loan payments, any owner draw payments, which is going to show you your monthly cash flow. This is important for purposes because someone might look at their cash flow or their profit and loss statement and see that their net income was 20 grand, right? Oh, my net profit was 20 grand this month. But they're not taking into account that they paid $5,000 in business loans and then $2,000 in credit card statements and then took owner draws. So they might go take out more money. And guess what? They really don't have it because they've spent it over here. So that's on financial reports. Not establishing goals and targets. I've never really met a business owner that doesn't want to profit. I mean, everybody is different, right? I mean, and everybody's different. Some people are driven by and really just want to keep growing and growing and growing and are driven by money. And then some people are like, no, I'm okay where I'm at and I just really want to help my team. So everybody's different and there's no right or wrong, but everybody wants to be making money, right? So if we do not establish financial goals and have targets set up, chances are you're not going to grow or scale your business. So I always, when I meet with my clients, I ask them personal and professional goals. What is your goals? It's important for me to understand that, because if someone, tells me, and I get this all the time, well, I want to lower my tax bill. I don't want to pay all this money in taxes. And me and my husband are going to buy a house next year. Guess what? We can't have it both ways. We can't go write everything off and then have you qualify probably for your house. So that's where I get the understanding. It's like, okay, well, we don't want to go try to write everything off here if and look for all these, write-offs if your goal is to start your own business or buy a new house or a rental property, whatever it is. So really establishing and knowing what you want to do and having goals and targets is really important for growth. And then managing it, like having the accountability, with I do this with my clients all the time. We look at stuff and numbers and I help them plan appropriately where they need to. So last point for me is write-offs, not knowing your write-offs. This is kind of a big one because sometimes people will come to me. I have this, like, for instance, I have a salon owner and I see all of her hair and makeup, or her hair and her nails and her lashes. And I'm like, okay, well, what are these for? And she's like, oh, well, it's in clothes. Clothes is the big one, and shoes, right? They're like, well, she's a salon owner and a stylist. She's like, well, I can write off, I was told that I could write off, all my stuff because I'm promoting myself, right? I can write off my clothes and you can't.
I heard that too.
It's not true. I know. So anytime I see payments like that, I automatically code those over as owner's draw, which is a personal payment, like to yourself. You know what I mean? So the only time clothing is a write-off
For uniforms or
just uniforms that are required. So like doctors, nurses, someone that's wearing a scrub or uniform, yes. Or if you do a branding photo shoot and you go buy that cute outfit, for your branding photo shoot, new shoes, and get your hair done, that's when it's a write-off.
okay.
But otherwise, clothing is not a write-off. I wish it was. Another big one is everybody thinks their cars, like they can write off their car insurance and their car payment. What?
I thought so too.
Not everybody.
Okay.
No. So honestly, most people, wouldn't you say most people can't?
Yeah.
If you want to know the truth. Someone like Heather, a real estate agent, can't. I mean, you have to use your car more, 50% or more for business purposes, and driving to and from the office does not count as that's commuting. So it's really like someone like Heather who is driving all day long to meet with clients, right? And doing showings and all of this stuff. So that would be a write-off for someone like Heather. I wish I could write off my new Jeep, right? Like, and I wish I could go, but unfortunately we can't. And that is so red flag. My job and a good bookkeeper is to make sure that that your books are audit proof, meaning we don't want you to get audited by the IRS. Sometimes we can't control that, but if you do, we want to make sure that we have them clean, right? And that everything is covered. So if I see someone who is writing a business meal is another one. Business meals for yourself, just Ubering food in for yourself because you're too busy to go out, it's not a meal. Unless you're out traveling on a business trip, then you could write off just your own meal. But to qualify for a business meal, it has to be for someone or someone on your team or a client or a prospective client, where you're buying food for yourself and someone else. Same with coffees. But I see those ones a lot. That's why I touch on those. But really, it's just we want to make sure that everything is accurate and coded right, and that someone is monitoring your books. Like Tina said, it depends on. I mean, if you have a business that you're doing, if you're doing $60,000 in revenue, I mean, really, you should be keeping up with your books monthly. It is an expense. The great news is bookkeeping expenses are a write-off. So that is a legit write-off. And so is when you pay your CPA, her fees. But just so you know, your payments to the IRS are not write-offs. So a lot of times people pay for that out of their business. Technically, that's a personal expense. So anyway, that's really it. That's all I have. So there you go. And now Lauren will lead in here with coaching.
All right, well, I always like to say that the numbers tell a story. They don't just exist in this alternate universe of taxes and bookkeeping and all this stuff out there. They actually affect our real lives, and we have the potential to use those numbers to grow our businesses profitably. And so today I want to tell you guys a story that'll give you 3 specific strategies that you can start implementing to do just that. So I am a regular customer at the Dollar Tree. I'm a big fan. And every year I take my kids to the Dollar Tree so that we can fill up our boxes for Operation Christmas Child. And just in case you've never heard of Operation Christmas Child, it's an organization that takes shoe boxes that you get to fill with toys and other items that get shipped around the world to kids in different countries who might not otherwise get a Christmas present. So I love to involve my kids in this, and it's been our tradition for the last 5 years to do this. And we always start off at the Dollar Tree because you can get a lot of really cool stuff there for not a lot of money. And my kids love that place. So we go there, and if you've been there recently, you might have discovered, as I did, that it really shouldn't be called the Dollar Tree anymore. But the $1.25 and up tree doesn't really have the same ring to it. So we'll let that slide, right? But everything there now costs $1.25 and up. But when I went there, was it really that big of a surprise? Was it shocking? Was I totally dismayed? No, because I can still get the best prices there compared to other stores. And so that is the first lesson that I've learned from the Dollar Tree, and that is to raise your prices when it makes sense. Not all the time, but when it makes sense. And, I can admit the Dollar Tree was probably long overdue for a price increase. Yeah. So we'll forgive them there. But this is a common mistake that I see business owners make a lot, is that they're undercharging for their goods and services. And it can be a scary thing to raise your prices, because what if customers all leave? What if it actually backfires on me and then I don't have enough revenue, right? And so what we want to do is create a framework to where you can systematically review your pricing and to have the confidence to increase them at the right levels at the right time. And the timing of this and the degree to which you raise your prices is going to be very industry specific. It's going to be unique to your business, but there are a few things that you can look at. One is, hey, what's going on in your particular market? Are you really at the low end? Are you kind of in the middle? Are you on the high end already? Really know what your niche is. Are you trying to be the lowest price? If you are, then that's great. Or are you trying to have the highest quality? I know of a company that sells, the only thing they sell are medical gloves, and they just sell latex gloves. That's it. And their whole entire goal was to be the best price. And so they base everything around that one goal. Now, another company might say, well, we don't really care about being the lowest price, but we want to be the very highest quality. I don't know, maybe these are going to be like made out of 24 karat gold or something like that, right? So obviously they can't be the lowest price and have the highest quality. And I see a lot of business owners try to give the best price, but also be the highest quality. But guess what? It costs money to be the highest quality. So you can't do that. You've got to pick what you're going for and really stick to that and really lean into that. And the other thing that you want to consider is, what are your profit margins? And the only way to know your profit margins is to have accurate accounting. So that's why it's so valuable to have people like Courtney and Tina, who really aren't just doing a perfunctory service where they're just crunching numbers, but they really care about the accuracy and what's going on in your business. And so that they're going to give you the accurate data that you need that then I can then help you take and turn that into a strategy for profitable growth. But if you don't have the numbers and they're not accurate, then you really are just it's just a shot in the dark. It's just going to be a guess. But you can make much better informed decisions about your company when you have accurate data. So the second thing is this. When my kids and we had our shopping cart full and we went to the checkout at the Dollar Tree. This was just a few weeks ago. And I have 7-year-old twins. And so they're learning how to, count money and do all these things. So they were really excited to do the checkout all by themselves. And the thing about it, though, was that Evie, one of my twins, she had a dollar bill and then she had a bag full of pennies. And thank you, Grandpa, for giving her a bag full of pennies to pay with at the Dollar Tree. But I have to tell you, the person at the checkout counter who was ringing us up, who was doing these separate transactions for my twins, letting them count out their coins, he was so patient. He was so kind. He encouraged my kids. He was saying, wow, you are doing a great job counting that money. Would you like a receipt? Would you like this in a bag? He was amazing. He took that experience at the Dollar Tree from good to absolutely incredible. I mean, truly something that stuck with me that I remember. And that brings me to the second point, is that you should always seek to give more, not less. Now, this interaction didn't cost the Dollar Tree anything, right? But it added value in a way that I'm excited to go back to this particular location, right? I'm excited for the next time that I get to take my kids to the Dollar Tree. I won't be looking for somewhere else to go because we had a positive experience. And right now in this inflationary environment, we're all feeling it, both personally and professionally, right? And you might be experiencing this too. And I've gotten this feedback from a lot of people that, man, customer service just doesn't seem to be what it used to be. Or I went to this hotel and it just is like worn down. It just doesn't seem like the upkeep is the same. Or the quality of the food at this restaurant, they raise their prices, but the quality isn't as good. So I'm not as excited to go there anymore, right? Well, we all have the opportunity to do the opposite, to go against the grain of what everyone else is doing and find ways to give more. Just like Seth and Heather have gone above and beyond to graciously host this for us, they're finding ways to give and to add value instead of, oh gosh, what corners can we cut here? So where others are cutting corners and really trying to save money by reducing the customer experience, always be thinking of ways that you can be adding value. And that doesn't mean it has to be expensive. But the third thing is this. We still want to keep our expenses under control. The very reason that I took my kids to the Dollar Tree is that I know that I can get a toothbrush and some Play-Doh and some stickers for a much better price than I can at Target or at Walmart. So that's where we shop first because it makes sense. And I really want to make sure that I can fill up those Christmas boxes with all kinds of awesome stuff. So I want to spend money where it really counts, but I want to save where I can save so that I can have the best possible Operation Christmas Child box to send. And it really should be the same in our businesses. We want to spend money where it makes sense, but we want to save money where we can. And you can do that with a business budget. So you want to keep control of your expenses by creating a budget. The books, the accounting, very important. That tells you what has already happened to the money. A budget is going to enable you to plan and be in control of what happens to the money going forward. That's how you align your business finances with your business and professional goals, is by knowing what are we going to do this month? What are we going to do this quarter? How are we going to make sure that we're getting the best ROI possible? The first time that I sit down with a client and we just go through the budget, usually we can save 5 to 10% in expenses just in the first go around, just by saying, oh, I'm still paying for this software subscription that I don't even use. Oh man, I'm going to cancel that today, right? And guess what? All of that money goes straight to your net profit. And so that's money that you get to say, hey, I'm going to take an owner's bonus, or I'm going to, I do need to start saving for my taxes. So I need to make sure I allocate that to taxes, or I'm going to give myself a raise, or I can finally afford to hire someone. You get to be in control of where your money goes. So raise your prices when it makes sense, give more, not less, and keep those expenses under control with the budget and you will be on your way to growing your business profitably. Thanks, guys.
Yeah, can we just have a round of applause for our professionals today? Thank you guys for sharing. Really appreciate your expertise, your advice. I know all of us in this room, as a business owner myself, I look back, I'm now 15 years in, and we kind of have redone an assessment just kind of recently to say, hey, where have been the best choices that we've ever made? And the consistent theme of actually, I mean, even as I added up, hundreds of thousands of dollars, like crazy to actually think about it over the last 15 years, is every decision that I've made is based upon somebody smarter than myself telling me. So like, honestly, like as I look at it, I'm like, wow, that wasn't my rocket science idea. It was surrounding myself with people who knew how to ask or the questions that I wasn't even asking, telling me what I need to know when I thought that I knew what I needed to know. And so I use it all the time in my business. They never teach lending in high school or college. So I'm glad that we get to have this conversation, because let me tell you what you need to know, right? But everybody in this room is that exact same person in your field. You guys are all experts in your field, but be experts in your field. Surround yourself with a team that is able to give insight into the things that you don't even know what to ask. And I think that's where Heather and I have continued just to brainstorm kind of as a lender real estate team. How do we set ourselves apart? One, in a field where everybody knows a dozen real estate agents and a dozen lenders. We're saying, hey, we want to bring value, and that is including connecting with the right people, connecting with experts like you guys in this room, and saying, we want to build our team of people we know, like, and trust. Because how many times do I get a phone call when somebody's going through a divorce or something, and they're asking me questions, pretending like I'm the expert? I'm glad they're asking me. I want to be the first phone call. But guess what? I have like 20 different industries that I connect people to, and it's all people that I've used or said, hey, they're the ones that told me to do this with my retirement account, and that saved me lots of money. Well, you should probably talk to them, or family planning, or attorneys, or structural engineers, whatever it is. Like, it's amazing how we are all overlapping those people. As you gain trust from your clients, from your family members, you guys are also that person that they call. And so anyway, we appreciate you guys being here. Thank you for being a part of it. Thanks to our experts. We want you to scan those QR codes. We just asked for just the feedback today. We're going to continue to do this with other industries, other professionals. We want you guys to network, because we are always under the abundance mentality that as we do this together, we're all going to benefit. We're all going to grow. And so, yeah, please, before you leave, scan that QR code, fill out your information and just some feedback and any other ideas or thoughts that we can do in the future and we'll keep you guys connected as we do this with other classes, investment strategy stuff that we've been connecting with. We're super excited about what's to come too. So thanks for being here, and help yourself to food. If there's anything else, we got a ton of food, so help yourself on the way out. But anything else, Heather? You're good? Okay. Thanks, guys. Appreciate it.
It's one of these things where I think we all together, you know what I mean?